Dalal Street ends in the red for the second week in a row with key indices falling over 1%. On this week's edition of Editors Roundtable, we'll take stock of the big events of this week. We'll put the spotlight on 18 years of Interglobe Aviation, and we'll tell you why Sanjiv Goenka's big plans for the RP Sanjiv Goenka Group companies are. I am Reema Tendulkar. With me are Prashant, Nimesh, Nigel, and joining us today in the newsroom, we've got Sandeep Tandon of Quant Mutual Fund. Hi, boys. You know, there are some weeks on a stretch where nothing happens, and then in this week, everything happens. This was just one of those.
I mean, I think this was the week when market said it's not just one way.
It's not.
It sometimes goes down also, right? And I think it also showed us that global stuff matters.
Yeah.
I mean, eventually it matters. It may not matter for long stretches of time, but it comes to a point where there can be a flare-up in volatility for a variety of reasons, and then the market pays attention. But I must say, even within this, India has been the best performer, high to low. I mean, the outperformance is there. The Teflon coating, which I keep talking about, I mean, that is very much there.
You know, a brokerage today said bulletproof. That's a new one.
Well, and you know, the market that was causing all the trouble at the start of the week was the Japanese index.
Yeah.
That was down more than 10% in a single trading session. It ended the week with a cut of only 2%.
2%.
So post that Monday, actually, it pulled back considerably. And I think the bulls felt good today after 11:30, 12 noon, because they said at least that market is shut. Let's get back to our own cues.
And you know, today was Friday was very low volatility. It was such a stable and steady session. Monday to Thursday, there was so much volatility. You open up, you end down, you start lower, you end lower. But today was like steady and strong through the day.
You know what adds to the strength of this market is the fact that look at this again, this month's SIP data, right? 23,000 crores of SIP money. We've been saying this, that this domestic money is what is leading to a big outperformance of the Indian equities, and we have one of the big domestic fund manager with us joining today. Sandeep, what's been your call? I think every fund has actually raised the cash levels of late. What is your sense on the Indian markets in terms of valuations, and where do you stand in terms of cash levels within your portfolios?
See, we have only 8-9% cash in a small and mid-cap space only. Otherwise, we have largely invested. Okay. We have been slightly cautious. I think from last month, I have been talking about that employed walls of the cross-asset, cross-market will move up. And it happened. Okay. Yeah. It is very difficult to pinpoint days and exact thing how it will play out. But we were talking about how the currency walls will come into picture, and we have seen complacency in US market. So vulnerability was high and it played out. Okay. So now question comes whether this is played out well or it's the beginning of a new trend. That's what we have to watch. The way I look at from a very near-term perspective, it has played out, okay? Because if you look at the wall indices of Nikkei, went to 70%, okay, which is maybe third or fourth highest maybe in last 30, 40 years, okay? It was actually higher than COVID levels, which is very unique, which is the employed walls of the Nikkei was higher than COVID crisis. So something which indicates to me that this is a big trailer. I think something is still pending, okay? Something has changed, okay? And similarly, if you look at I'm trying to give you a behavior aspect of the walls data. If you look at the US market also, okay, one single day it was 65%, closer to the COVID levels, okay. We have not seen this sort of spike, and within the same date settled, okay. The overall wall indices globally are still marginally elevated. So I like to wait and watch and see whether they'll correct significantly or something has changed. My view is that we like to remain cautious for even from a next 1 or 2 months perspective also, because something gets changed, never gets settled in few days time. So with that background, we are not preempting anything, but we still remain cautious that walls remains elevated.
I mean, as you said, this is the trailer. So I'll come to you on that. And Sandeep, by the way, he manages, of course, for the uninitiated. I don't think any of our viewers don't know Sandeep. He manages Quant Mutual Fund, reaching closer to that magical 1 lakh crore.
Yeah, we are slightly shorter of that.
And he started, and I've said this before, but he started with 500 crores in AUM in 2020, right? March, I think, 2020. So it's one of the fastest growing mutual funds.
In fact, equity AUM was 27 crores.
27 crores, and we're now talking about
96,000.
96,000 crores. So more from Sandeep, but if you missed the market action, let me just quickly recap things here. So as I said, right, I mean, global stuff came to the fore. It mattered. It started, of course, with I mean, you can always go back and back, say it started sometime in the middle of last week because, I mean, the indications were there from the Japanese market, etc. But it really started, of course, with the labor market data last Friday. You had sort of, Six Sigma moves, big, huge moves that day. And then, of course, the market here started correcting. And, of course, it was also the yen carry trade unwind, which the yen had a 20-handle move. That is 162 to 142. So that is, it's only happened, I think, 5 times in the last 20 years with interest rate, with interest rate differential of 5%. It's only, I think, happened once or twice. So really unprecedented week in that sense. By the end of the week, so this is what happened. By the end of the week, things calmed down. The initial jobless claims data came from the US. It's weekly data, but because we are sort of scratching for any thing which indicates calm or otherwise, there was outsized attention to it, and that growth scare, people kind of backed off of it. On the yen carry trade, JP Morgan put out a note this morning essentially saying that about 70% of the carry trade unwind is behind. Now, I was surprised because, what do they mean by that, that 70% is done? Are they saying yen shorts have been unwound? Or are they talking about everything else, everything combined? Because, estimates of how large the carry trade itself is kind of unknown. As I said, Nifty still outperformed. High to low, Nifty fell 4.5%. S&P was down 9% at one stage. For the week, Nifty is down 1.5%. Bank Nifty is down 1.7%. Mid-cap index is down 1.2%. And small-cap index ended about 2% lower. So let's pick up from where you left off. This is the trailer. This is, in that sense, the first episode of volatility. You're expecting more, Sandeep.
If I look at the entire characteristic, the way it is unfolded, it looks like that we have seen first round of trailer. You have seen in yen, maybe the next round of volatility will come in dollar index. Okay,
so you mean the dollar goes higher?
Yeah, that will go higher.
But what will cause it, in your opinion? Growth scare once again, or?
It could be combination, okay? Or let's say, because if you really go back to look at the cycles, let's be very clear, this theme of talking about yen carry trade unwinding, nobody knows. See, I have been a large player of derivative in the past. We understand that space. People create so many synthetic out of it. So it's very, very difficult to really pinpoint that 75% is unwinding. I think Bank of Japan also don't know up to what extent this misuse has happened. Okay, so the only way you can figure out through EPFR data or some of the exchange data where you give the origin of the currency. From that perspective, you can reverse calculate and get some numbers. But no way you can figure out. My sense is this number is far, far higher than the $2 trillion numbers which is there. See, today look at the global liquidity is around $190 trillion and yen carry trades plays a very large number. So it could be as high as 30, 40, 50 trillions also. We are not going to rule out because it has a leverage effects, and you have to keep in mind it's not about the directional trades. People leverage, borrow through and create a synthetic out of it, and even these are largely hedged trades. Okay, nobody trades a very sizable position on the directional side. Okay, so maybe directional trade you can say you can quantify through exchanges route. It could be $2 trillion. So that could be played out. Okay, the first round obviously the pressure get will on the hedges. So they got capitulated. Now the long-term players. So if you see, let's say after recovery of USD JPY, it recovered further today 147, 148. It recovered back to 150, 150. When the second round of pressure get built, maybe that stage some of the people who have created a structure or the synthetic for a long-term perspective, they might unwound. And maybe third round they give up completely and that will be the bottom. Okay. So I think it's a premature to conclude that this has been settled down. 70. No, it doesn't look like. I think it could have more ripple effect will come.
Your portfolio is reflecting some of, what your view is, right?
Yeah.
You've moved largely into more safer, defensive kind of names.
Correct.
So just, so what kind of sectors are we and what kind of names?
We have been cautious. We always said that easy phase of bull run is over. Yes, we are in bull run, but decisive phase. But within decisive, if you can quantify these phases well, so we have moved towards from illiquid to liquid portfolio, from high beta to very low beta portfolio. So a large portfolio is now towards consumption, pharma, insurance, hospitality in general, hotels also, if you want to talk about. Then we have built a very large exposure. Still, we have a large exposure in energy because courtesy Reliance being the largest one. So that remains skewed structure. Insurance is something which you rebuild further. So I think our
LIC is a large
LIC is also a large holding. So 70% of our portfolio in the entire is about these sectors only. So it's a very, very conservative approach. We are not in a mindset to raise very high level of cash. If call goes wrong, we don't want to get stuck with that approach. So better to participate, better to underperform rather than sitting on very large cash. So we are not taking that call. But it's a very defensive portfolio in today's context.
Let's also quickly recap the big headlines from this week. It was a very news-heavy week. So starting with the RBI policy, on expected lines, the central bank kept rates on hold for the 9th consecutive meeting, but they did sound hawkish and they said that they will focus on headline inflation and not core inflation. So setting the record straight over there. And they also raised the caution on top-up loans being given by banks and BFCs on gold and home loans, and once again said that deposit growth is trailing loan growth. Secondly, the other one, big one, was on Friday, Ola's listing. Remember, Ola is India's largest two-wheeler EV maker with a market share of 46%. But look at the close. By the end of it, Ola Electric ended with an, up close to about 20%. Took a lot of people by surprise, considering that Ola was loss-making. So I don't think very few people would have anticipated this kind of close. And finally, we were also in the penultimate week of the earnings season, and it's been a muted Q1. So Motilal Oswal analysis is as follows. For 46 out of the Nifty 50 company, the PAT growth has been about 4%. Estimates were of 2%, so in line with estimates. For mid-cap, 69 companies in their coverage, the mid-cap earnings growth has been negative 12%, and small caps is where there has been a miss compared to estimates. So 86 companies of small cap, this is Motilal Oswal analysis, the earnings growth has declined by 4%. They were anticipating a little bit of a growth. Sandeep, you spoke about how you've raised the cash level in small and mid caps. Now, in the earnings season so far, the miss has come in largely on the small and the mid cap universe. In your portfolio, where is it that you've seen some underperformance, where you've booked out, fearing that fundamentals are not matching up with the valuations right now?
So I think, let me answer this question first of all. See, yes, there has been miss on estimate, but the liquidity has been so meaningful. Hardly any impact on the prices. Okay, you correct 5%, next day same stock is up 10%. Okay, so you are not getting the true picture when you start looking at just purely on the valuation. That's the way we start talking about how the sentiments is around that, what is the liquidity aspect. Okay, so India liquidity, good liquidity is very large. So I think with that background, I think we remain very constructive on India on relative basis. The absolute basis we are doing reasonably well, but I think what is very interesting, the relative basis we are doing very well. At some point in time, money will come in a big way to India. Okay, today, let's say, because of this carry trade unwinding, the first day people have capitulated. A lot of hedges got calculated. All the guys who came through P-note structure, they got capitulated. But from a longer term perspective, I think a lot of money is sitting on the fence and we will see participation. So I don't think one should keep a very negative mindset even in the small cap. In fact, I'm very constructive from a longer term perspective, not from next 1 quarter perspective, but somebody has like 4-5 years, 10-year horizon. I think this is an area which should do very well, irrespective of disappointment with what we see in the recent earnings seasons.
Okay, Nimesh has got something special for us. He's talking about IndiGo and 18 years, 18th anniversary. They've announced some big programs, and what stood out for me was the frequent flyer program. Right?
Absolutely. So, IndiGo 2.0 is going to be a big thing for the company. That's what they've been claiming. But, look at the last 18 years of IndiGo. It's been flying high, continues to be the market leader in India. And now it's the second most valuable company in terms of market cap. So, Mr. Go to the wall and explain what IndiGo 2.0 would mean for this company. So, as I said, it's been the market leader in India and a big market cap company as well. But company recently announced IndiGo 2.0. Which means, they've put out some new strategies, which includes, they've now announced the business class offerings from November of this year. Second, they've announced easy to earn and burn loyalty points as well as loyalty programs. Third, they've announced 40 new international routes by end of this year. And fourth, they're going to upgrade their websites and mobile apps for further enhancement for experience for the customers. Now, what an analyst is saying, analyst believes that the business class will widen the addressable market. And loyalty program is a big plus for the company. Business class will not only improve the RASK, but also improve the margins for the company going forward. And loyalty program would mean further stickiness as far as the customers are concerned. Now, the street seems to be quite excited about IndiGo for a very long time. Look at the brokerage ratings and the target prices. Virtually everybody is having a buy or an overweight on IndiGo. Kotak, Citi, Morgan Stanley, and JP Morgan. And the price range seems to be between 5,000 to 5,400, which means a potential another 15 to 25% upside even from current levels. Now, generally we've seen, when there's a big supply overhang on the stock underperform, but that's not been the case as far as IndiGo is concerned. That shows the kind of business mode this company enjoys. Gunwal, one of the big promoter entity, they've been constant sellers in the stock in the last few years now. They've done 4 tranches of stake sales from September 2022 all the way to March 2024. They've sold stakes virtually every 5 months. In fact, now they're going to sell further because the lockup is going to end. But most interesting is, ever since the first block when they sold in 2022, the stock has actually doubled in that particular period. Now expect a large block deal very soon because the lockup of 5 months is going to end in the next few days. So there will be further supply. But again, the stock has been outperforming despite the selling. Just a word on the market cap and the valuation picture now globally. IndiGo is now the second most valued company in terms of market cap, commanding a market cap of nearly $20 billion, trading at close to 20 times. Of course, Delta Airlines is the most valued company at $24 billion. The rest are Ryanair, Air China, and Southeast Asia, having a market cap between $15 to $17 billion. But again, in terms of valuation, it's still quoting at 20 times. And the 2.0 means there could be further upside as far as what the brokerages are saying. So looks like the dominance of IndiGo is likely to continue in years to come.
The old cliches about airlines not making money. Sandeep, you have a view? Airlines as a business?
Historically, nobody has made money. Nobody has made money. So I think we should not celebrate this thing. It's too premature.
But can't fault their execution.
No,
right?
they have done a great execution.
They've come
the
through.
challenge is that the stock will get supply on a perpetuity basis. Okay, and that is the problem. Okay, both the promoters are seller. The liquidity will keep on rising. As long as Indian market has a bull run, it can be absorbed. The moment it reverses, then exit becomes very difficult in such names.
Absolutely. We'll take a quick commercial break here. We have more to cover. So we're going to see you on the other side. Stay right here.
Welcome back. You're tuned into Editor's Roundtable. Well, we're turning the spotlight on Sanjiv Goenka companies. Remember, he did an interview with Shireen Ban here on CNBC-TV18. And from there, well, the stock market has got a little bit excited, at least on a couple of the companies that he is heading. Let's run you through a few details. First, the entire piece comes up. You have the power and utility company. You have the KPO that he runs out there, the largest carbon black company here in India. You have the music library as well, the retail venture, as well as the holding company. So that's basically the entire bouquet of companies that Mr. Goenka does head. The street actually got excited with that one statement that he says he believes the entire market capitalization of the group will go to around 2 lakh crore odd. Currently, it's around 72,000 crores odd. So the aggression that, the street has read it as a rather aggressive statement. As of now, 71,000 crores is the total market capitalization, and bulk of it comes in from CESC, from Firstsource, as well as PCBL. And both these two is something that the street is quite optimistic on. Let's focus on PCBL first. The margins have improved gradually over the last few years from around 14%. It's come up to around 16%. Profitability as well has gone up big time, from around the 300 crores all the way to around 500 crores. But what he said was he's expecting margins to improve even more. He's talking about 17 to 18%. And he's saying the profit number from 500 crores, it could go up nearly around 5x. Now, those are big and tall targets. If you look at the Bloomberg estimates, then on FY26 numbers, the stock is trading at around 22 times. But if in case the profitability goes up by 5 times in the next 5 years, then it's at around 7 times odd. So that's about PCBL. Moving to Firstsource, that's been actually an underperformer. It's not grown as much as the market. The street has been quite disappointed out there. But they have gotten a new CEO last year. And earlier he had roles at Tech Mahindra as well as Infosys. Infosys for more than 10 years. At Tech Mahindra, he was heading their BPO division, and he had reported very, very good revenue growth of close to around 20%. So now the street is optimistic that maybe, in fact, this growth that is looking quite subdued over the last few years, barring the COVID period, maybe Firstsource can continue to grow from here on. And one of the things that they have done is they've gone ahead and they've upped their guidance. They've upped it for the current year to around 11.5 to around 13%. The long-term margins, they are talking about going to around 14-15%. And if you look at the valuation parameter, even after the recent run-up, it trades at around 20-25 times. So that's on Firstsource as well. Moving to the other piece that we're looking at, this is an interesting one, because the other way to play Firstsource is play the holding company. So RPSG Ventures, it has close to 50% stake in Firstsource. That's valued at roughly 11,000 crores. The IPL franchise as well, 51% is held under this franchise. And the football club, Mohan Bagan as well, is under this one. They also have a group of FMCG companies. and 3 of them come up for you on the screen. I understand that as of now, 2Yum is doing revenues of close to around 1,000 crores. So that's the holding company that they have as well. Scaling up of the retail business is going to be interesting. For the last few quarters, they haven't got past that 550 to 600 crores. Margins have been very, very minimal or absolutely zilch as well. So that's a smaller part of the business. The street believes that as of now, the market capitalization of the entire group is around 70,000 crores, but they have taken note of that target of around 2 lakh crores odd. So let's see how they get there. But those are the broad companies that he is heading. PCBL and FirstSource, I'm going to keep an eye out on both those two. Well, Sandeep, I'm coming across to you then with regard to this group. I'm not sure whether you have a view on the group or any of the companies, but sometimes when promoter entities start showing aggression, that's one of the first indicators that maybe in fact things are turning. Your comment on it.
See, I will not comment on individual names, but I say some of these companies were trading in the neglected zone for a while. It got neglected, and you have seen in last round, all neglected stock have rallied a lot. But generally, as a student of behavior finance, we'll take a with pinch of salt when people talk very aggressive,
Okay.
Suddenly, very aggressive numbers come into picture. From a behavior perspective, we'll look for some amount of caution. We should not get carried away. Because execution is the key, because making statement is very easy, but we have to see how well they can execute. But generally, I like to be cautious about such statements.
Okay, all right. So very cautious. But Sandeep, I wanted to ask you about the metal pack. We spoke about currency. We spoke about growth as well globally. And irrespective of how good balance sheets are, we know a lot of these metal companies, the balance sheets are very good. And you've got a couple of those very, very well, particularly PSU government-owned metal companies. What's the view at current reckoning? And some of these PSU metal-owned companies have corrected from the top. Your view on it?
So, Nigel, if you look at it in isolation in India, looks very good. Entire material space,
Yes.
because India is growing. You can't grow.
But the global factors are worrying.
The only problem is global factor. And I will like to remain slightly cautious from a near-term perspective, because when we're saying that global volatility is going to expand further, and if you're talking about a risk of dollar index spiking, okay, with that background, it will be premature to take a very aggressive view right now. I think they have done a great job in last 2 years. From January, February 2023 have been rallying. Okay, I think if it's good, if they get into some sort of correction and consolidation, which is the case, and when this global volatility settle down, that's a time I would like to add big time in our portfolio, because we have pruned down a bit, but we are not negative from a structure point of view, but purely cautious from a very near term, and I say near term, just a quarter perspective, maybe 2 months perspective. Once this global volatility does settle down, we will relook this space again.
And the view is for the market also? I mean, it's near term. The cautious view is a quarter long from
quarter
here?
sort of thing you can say. One has to be cautious, because very difficult to see how exactly it plays out. So when we talk about, let's say, India, per se, we are very, very convinced about India long-term story. But from a very near-term, very short-term perspective, I will play safe. I don't want to be, is samay Shivaji nahi banna hai. That's the way I look at it. It's better to protect the capital and survive this phase, and then I think everything looks good to me after that.
Absolutely. Sandeep, great conversation, and thank you for dropping by.
Thank you.
Thanks a lot for calling us. Okay.
Well, I think
It's time to wrap up this edition of Editors Roundtable. More news and updates on the other side.